October jobs number, 150,000. Unemployment rate ticked up to 3.9%. Not that I place much value in those statistics, particularly because they're almost forever revised significantly after the month after they're announced. Anyway, that's good news, right? We want fewer jobs created. We need more people out of work. That's the position of Fed Chairman Jay Powell, I thought, to bring down inflation, bring down the pressure on wage increases and associated price increases. So good news. Stay the course, 1,000 points of light, right? For more on that, James Perry joins us, founder, CIO of Perry International Capital Partners. James, thanks for joining us. Appreciate it.
Thank you, Dan. Good morning.
So everything's going according to plan.
Yeah, I think that's right. I mean, 150,000 jobs, 180 expected. And again, like you said, the statistics are a little bit goofy. I think the number probably would have been 198 or 200 without the strikes, and that's sort of 48,000 people or something. So we are coming down on the job growth. I think the last 12 months, job gains have been sort of 266,000 a month. So 150 is a lot lower than that. And if you go back 2 years, when the stimulus was all here, we were getting sort of 379 new jobs a month over the last 24 months. So the economy's slowing. The Atlanta GDP number, the GDP number for Q3 came in at 4.9, and Atlanta Fed expectations for Q4 are down to sort of 1.2% now, something like that. So desired effect, higher rates have slowed the economy, no doubt.
Well, with his abysmal numbers, I mean, Biden's, he's going throughout the Midwest campaigning on Bidenomics, touting it as a success.
Yeah, that's kind of a problem. I mean, the economy is definitely right. Listening to Powell a few days ago, he seemed gratified that the economy hasn't collapsed more. And as Judy Shelton said this morning, he's really more bewildered because, the reason we haven't slowed down more is all this fiscal deficit spending. And if the government hasn't been spending so much money, the economy would be in a recession already. And the fact is that at some point, you see it today, the dollar's going down hard. And the reason for it is that the government can't afford to spend this money. And if they weren't doing it, it'd be a lot worse off.
Wait, they can't, but this is the paradox. They can't afford to be spending all this money. We can't afford to be spending all this money, printing and spending all this money, but we can't afford not to.
Yeah, I mean it's unhealthy at best. I think that what has really changed things. Everybody in the country knows that prices are really high, right? Everybody knows it. Every household, every small business, and the cost of money's high too. So the economy's not doing that great. I think the surprise has been how strong consumer spending has been really through the summer. It's starting to slow down now, but consumers were leading the economy, and I think Powell didn't even bring up the two things that he was supposed to bring up. He did not answer the questions about the two issues that are really worrying investors the most: inflation and budget deficits. Not a word. Didn't talk about it. So that's the whole story in a nutshell.
So half of S&P companies have reported earnings, and I read from your newsletter the average about profitability about 2.7%. So, I mean, I know the story is that business investment is way down, but profitability isn't. And so we're going to continue to click along, maybe not at 4.9% GDP growth on a quarterly basis, but we're going to continue to click along. So again, stay the course.
Yeah. I mean, I was looking last night at the earnings from Apple, right? And if you think about Apple, which is, biggest company in the world, most valuable company in the world, top line revenues are down again for sort of, I think this is the fourth quarter in a row the top line revenues are down for Apple. for all kinds of reasons, manufacturing in China and expensive toys. But the fact is net income is up. And if you look at the S&P companies that have been reporting, they all have one thing in common. Revenues are fairly reasonable, but profitability is still running at, 7%, 8%, 10%, 12% profitability, net income increases. And that is really about inflation, right? I mean, you look at these consumer products companies, the goods we buy in the grocery stores, the packaging is smaller, and the prices are going up, and people are still, to this date, up to the summer anyway, to the last quarter, are still not being dissuaded to spend because of higher prices. And what we see now, I think, really, is that that's changing pretty quickly. People are just going to sort of start boycotting spending. And I think that consumer spending is going to come down.
Well, we got the holidays right around the corner. It's going to be hard.
I know. It's the holiday quarter, as they call it. And retailers, routinely make 50% of their net profits in the next 2 months, for the year. So maybe they go into more debt. We got this credit card issue that's rising every day. We'll see. It's going to be interesting. I mean, I think the biggest problem is we're going to slow down and we're going to keep inflating. And that's the same story we've had, which we've been talking about on this program for, 24 months. That's a stagflation economy. And if the president wants to brag about that, people aren't going to buy it, right? So.
Well, Amy, if you don't want to buy me a Christmas present this year, I'll understand. Don't worry about that.
Thanks. I'll give you an experience. You get to see me. We can spend some time together.
But the equities markets are still, there's a little bit of a hiccup, almost moving the NASDAQ into correction territory last week, but we're rebounding. Equities markets are performing positively. So, I know you put this distribution of where your money is in your newsletter. Can you tell our listeners what percentage of your portfolio is in equities?
Yeah, it's less than 10%. Wow. Well, I'm getting 5.5% on sort of 85% of the portfolio, and that's okay for now because the S&P, even with this last couple days of rally here, it's still down 6% on the year, right? I mean, and it doesn't. Let's put it this way: the stock market is very, very happy since Wednesday for two reasons. Number one, the Treasury made the decision or came to the realization that they can't continue to bring supply in the longer end of the Treasury curve because people aren't going to buy it. And that's deficit spending. So you are beginning to see the government have to react to the bond vigilantes out there. So more and more of this issuance is coming in the short end of the curve. And the stock market thinks that the Fed is done, right? I mean, this is the whole deal. Has the Fed finished tightening? And just about everybody on Wall Street will say yes. Now the question is, what do you do from here? And what you do from here is you probably keep inflating. So I think at some point here, you're going to either see rates go back up again. I would not be buying bonds here, to be honest with you. You got a negative real yield. You want to buy a bond right now, you're going to lock in a negative real yield, right? That's not a good investment. So bonds are here, but they haven't really gone very much further than they've been for the last sort of 3 months or 6 months, which is higher. But, again, Powell is not worried, or let me put it this way. Powell is thrilled that his rate increases since March of 22 have not slammed the economy into a recession. He's ecstatic that has happened.
And
has he solved any problems? No.
And the impact of geopolitics, war I'm talking about, the impact so far has been negligible?
The oil prices are lower today than when October 8th hostilities started. And I think that surprised a lot of people. The dollar is drifting downward and rates are lower, and there is a certain element of flight to quality with respect to the bond market. There's no question about that. The world's a dangerous place. But I think that there are global investors who are reluctant to buy treasuries here because they are worried that this country's deficit situation can only get worse without the government taking some actions to change their behavior. So something's got to give eventually. And for now, we can sit here and just wait for everything to be sort of neutral and hope that the stock market doesn't go down and that the economy doesn't slow down too much further. So slow-moving train, I think.
Jim Perry is the founder and CIO of Perry International Capital Partners. James, thanks as always. Appreciate it.
Thank you very much. Have a good weekend, Dan and Amy.
Thank you. And he joined us on our turnkey.pro answer line.
This is Chicago's Morning Answer.
Your show keeps me alive during the week. There's nobody I'd rather listen to between 5 and 9 in the morning than you guys.
On AM 560, The Answer.
If your money is not earning at least 6% tax deferred, you need to call Professional Life and Casualty. They're offering a 6% APY on new funds deposited into your annuity, traditional IRA, or Roth IRA accounts. Rate subject to change. Please call to confirm. With Professional Life and Casualty, you pay no surrender charges, no administrative fees, and no withdrawal fees. Professional Life and Casualty has been providing insurance and annuity products for over 60 years. Visit plcinsurance.com, plcinsurance.com. They'll send you a free guide to tax-deferred, no-fee annuity. Earn 6% APY on annuity, traditional IRA, or Roth IRA. Pay no surrender charges, no administrative fees, and no withdrawal fees. Only from Professional Life and Casualty. Call 1-800-651-1800. That's 1-800-651-1800.
By the Hand Club for Kids exists to help children who live in under-resourced neighborhoods have abundant life. God is transforming our city through By the Hand. I know this for a fact because I am a student at By the Hand, and my life has been drastically changed as a result of it. Learn more at salem.bythehand.org. That's salem.bythehand.org.
The following is a paid political announcement.
Valparaiso is a growing community that has become a model city for the Midwest. Valparaiso has momentum, and Matt Murphy wants to make sure we keep moving forward.
Over the past 4 years, we have prioritized public safety by adding additional police officers, firefighters, and school resource officers, and decreased crime by 11%.
Now, Matt Murphy is running for Valparaiso City Council to keep our city on the right track.
We've invested in our infrastructure by paving more than 30 miles of roads. We engaged the next generation by creating the Mayor's Youth Council. We've increased our rainy day fund, improved government transparency by live streaming our meetings, and kept property taxes low.
As a conservative leader, Matt Murphy will work to keep Valpo a strong and thriving community.
We've done a lot, but the work isn't done. Valpo's on the right track, and we need your help to keep conservatives on the City Council. I'm Matt Murphy, and I'm asking for your vote on or before November 7th. Paid for by the Committee to Elect Matt Murphy.
An informed and educated citizenry is the only guarantee to preserve our constitutional republic. And each week, you'll hear from experts, not pundits, and find out what's really happening, from local issues to national politics. Listen to The Real Story with Jeannie Ives. There's no topic of public policy concern that she won't talk about. Stop the lies. Learn the truth. Join the conversation. Sunday night at 7, right here on AM 560, The Answer.
Why should the Federal Reserve have so much power over your IRA or 401k? Whether they create a new bubble with low interest rates or pump the last bubble with high interest rates, a group of unelected government officials has no business deciding your future. Hi, I'm Dr. Ron Paul, and this is just one more reason why I recommend a physical gold IRA from Birch Gold Group. Because precious metals are the best way to maintain your financial independence. And now you can hold gold inside of a tax-advantaged account. To learn more, text the word HEDGE to 989898. And my friends at Birch Gold will send you a free info kit on gold IRAs. Birch Gold is the only gold IRA company I trust, so text HEDGE to 989898 to request your free info kit right now.
AM 560, The Answer.
Open mic! Mike Friday. Call it now.